Today, traders are actively buying the US dollar and preparing for the Fed's key interest rate hike of 50 basis points. The US regulator has to take more radical measures to curb the surge in inflation, and this action is boosting investment attractiveness of the greenback, thus lowering demand for the euro. Meanwhile, the European Central Bank is not planning to raise the benchmark rate in the near future, regardless of extremely high consumer prices. Today, Germany, the main European Union economy, disclosed its preliminary estimates on inflation growth. The data bitterly disappointed investors. In April, Germany's consumer prices surged more than expected by 7.4%, reaching the highest level since 1981. Economists had expected a smaller rise of 7.2%. The signs of economic slowdown in Europe are also aggravating the situation. This, in turn, prevents the ECB from taking the necessary measures to cope with the inflation growth. The existing geopolitical tension and the risks it may cause also have a negative effect. In this light, the euro-dollar pair dropped below the local low recorded on March 23, 2020. As a result, the volume of short positions increased, thus pushing the price deeper to 1.05. Since the beginning of the week, the euro has depreciated by about 300 pips. The level of 1.05 is acting as support. If the price touches this level, the volume of short positions may decrease. This, in turn, may lead to a technical rebound or a fully fledged correction. At the same time, traders' speculative behavior may allow the pair to break their control level. However, market players are likely to ignore an oversold signal. Thus, if the euro settles below 1.05 on the 4-hour chart, it may slide deeper to 1.0350. The pound sterling also continues losing value. Today, the pound-dollar pair is trading near the lowest level since September 2020. This drop was spurred by weak macroeconomic reports and less aggressive than expected comments provided by the Bank of England's governor. Now, markets suppose that the regulator will raise the benchmark rate by 150 basis points, whereas only on Friday they expected a rise of 160 basis points. On the chart, we see that the pound-dollar pair lost 550 pips just in 1 week. If the price settles below 1.25, the volume of short positions may jump. Since speculators are expecting an inertial movement, they are likely to ignore the signal about the pound's oversold status. Although technical correction is possible, the pair should first find a support level. Notably, an intermediate support level is located at 1.25, 1.2250 and 1.20. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.